want to talk a little bit about how pricing works. And I might have to get my handy dandy calculator out here. But if you see over on the other side of the screen, okay, this is a sample like rate sheet, so to say. This is no one's specific loan. These are not what we are offering. I'm just showing you a sample. All right. So hold me to that. There's specific laws on that. All right. So don't hold me to this. This is just a sample and just somewhere to help educate you on how this works. Okay. Because once you're educated, right, you never think someone's pulling one over on you, whatever it might be, right? You know what's going on. You work as a team with your loan officer, whoever it might be, and you figure out what's best for your financial budget. Okay. So a lot of people come to us and go, what is your rate? Okay. That's a very loaded question, first off. A lot of things go into rate, right? How much equity you have, your credit score, the type of property that you own, a condo, a single family, a duplex. There's so much that goes into your rate, okay? That have these like adjusters pop in. That's a whole nother convo, right? That again, sometimes I don't even understand, all right? But there's a lot that goes into it. So what I want you to think about is there's pricing behind a rate, all right? And that pricing is always moving, all right? I like to think of it's like a stock, right? So stocks are constantly moving, or if you're in crypto, it's constantly moving 24 hours a day, right? So that's kind of like the pricing behind a rate. Now I'm doing this in a very simple format so you can understand there's a lot more to it and a lot over my head and a lot higher than my pay grade, right? But let's take a look at this and how we try to help clients what rate to pick, all right? So if we look over here, all right, you have options for almost every rate. If you're looking here on the left-hand side of your screen, all right, these are the rates, all right? They usually go in eighths of a percentage, all right? So like you see, when you say, wow, what's your rate today? Well, it could be any of them. Depends on what you want to pay for them. So think about it. If you want a low rate, you can have that, but it's going to cost you a lot. If you want a higher rate, the lender's going to pay back money to you to help pay other closing costs and credits, all right? There's always like a middle of the range rate, so to say. And for this, let's take a look at that, all right? So we can discuss how it works and then how you can figure out what's best for you, okay? Remember, everyone's situation is different, all right? So if we're looking down here, if we're looking at that dead even par rate, that means no points. If you've heard of points, points is that like pricing I'm talking about, all right, in a simple format. So if we're looking at the break even, look at this. We can do an exact rate, 3.243. If you come over to here, look at this, zero money it costs for that rate, okay? Pretty cool. And then if you come over all the way to the right, this is your principal and interest payment. So remember, if you're buying a house, this doesn't include taxes and insurance, all right? So when you do your all-in payment, you're taking the yearly property taxes, you're taking the yearly homeowners insurance, maybe there's flood insurance, whatever it is, dividing that by 12 and adding that number to this principal and interest payment, okay? So let's say you say, JP, hey, I really want 299. I want a 299 rate. Okay, here's your 299 rate. It would actually cost you just over, in this situation, over 1 point of your loan amount, okay? So this, I believe I threw in just a $400,000 loan amount. Look how much it costs you right there for this rate. Over $5,400 in points, okay? Now, that could make sense, really. It really depends on how long you're going to stay in a house. Can't predict the future, but we ask that question because we try to put people in the best decision possible for, let's say, a refinance to where's that going to cross with your current loan, right? Is it going to take 10 years? Is it going to take 5 years to cross over the cost of the loan? That's how you can figure out if a refi makes sense, okay? But let's just take a look at this one. If you were buying a house, all right? So 299 versus this 3.243, zero versus that much money out of pocket. So what I like to do is I like to take the difference between the payments. So if we do 1739.29, 1739.29 right here, that principal and interest with no money out of pocket, okay, versus the 299 payment, which is less, so 1686.20. That's $53.09. Let's write that down. $53.09. Now, what we like to do, this is trying to calculate a simple break even. All right. So it's a difference in $53.09, but it costs just under $5,500. So we go 5496 divided by 53.09, the difference in the payment. That equals 103 months. Let's divide that by 12. 8.6 years. Okay? That would be your break-even point, 8.6. So think of it like this. Sure, that 299, that looks really sexy, right? There's a 2 there. All right? But it costs you just under $5,500 right now. It costs you a one-time fee to have that rate locked in. Or you take this one where you don't need any money. Payment's only $53 more per month, which 53 can be a lot of money, but not that much when it comes out to $5,500, right? So that 8.6 break even is how long it's going to take you to make up that $5,500 if you took the low rate. So if you think you're going to stay in a house 8 years or more, definitely 100%, maybe you go with this and you have the cash now, short term, that can make total sense to you. Let's go for it. If you know you're going to be there. But hey, most people, depending on your age, only stay in a house, 3 to 5 years, 4 to 6 years? That might not be the smartest decision, right? I mean, you could say, JP, I want 2.125. $27,000 you would need just to get that rate. And it would only be about $200 cheaper, $230, right? So it doesn't always make sense to have the lowest rate. It depends on your budget. Some people need cash and they're okay with the monthly payment, but they're just cash strapped. Totally cool. They're buying a new house. They want to have a specific budget. They want to put a 75-inch TV up there. They want to do this. They want to do that. So it's all about your budget, right? They might say, JP, you know what? I'm cool with a higher payment. Even if it's $120 more per month, I'll take $375 because look at this. It's in parentheses. You're going to get 6 G's back to pay closing costs. You're saving $6,000 out of pocket to help pay all this other discretionary closing costs that you need, right? That could be big for you. We do that a lot with people's budget, right? So let's do that one real quick. We have 17, we got 1852 minus, I'm looking at the principal and interest payment at the bottom. Coming down here, 1739. 0.29, let's make it exact. That's $111. I'm sorry, $112.71. All right, 6,000 divided by 112.71 equals 53 months divided by 12. That's 4.4 years. So if you took that higher rate in the 6 Gs now, all right, you'd be winning for 4.4 years. But after that, you could be losing because that rate is higher. Okay, so it's all about break evens. It's all about your specific budget. That's what we try to do. We try to go the extra mile, even in a really fast-paced industry where a lot of people won't go that extra mile. We try to do that, and you should work with an advisor helping you get through this. And then, hey, underwriting, everything that happens out of your control, you do what you got to do. But these are some things that you can control when you're buying a house or even refinancing. Hey, if you should need anything, please hit us up at any time, and I hope you have a great day.